For a long time, I was guessing. I had levels, I had patterns, but I didn't know who was actually in control. I'm still learning this, but this was the exact moment that changed how I see price. When I saw this, I stopped guessing and started waiting. Okay, let me show you why I will never, ever go back to no more candlestick charts again. Let's go over an example from February 2nd, 2026. From this, just by looking at this, price is going up, right? Where would you enter from? Would you wait for price to come into this fair value gap? Or would you wait for price to come into this fair value gap and put your stop here with a 23-point stop loss and target the previous week high? This is where order flow comes in. You wait. This is a trade I took on Monday. We got relative equal highs. We started building this trendline liquidity. What happens first? We run some stops, right? You trap some buyers here, we run them, and then now we got trapped sellers here. At what point would you enter? I'm sure a lot of people took this loss. You got an inverse fair value gap. A lot of people are looking at this. So what happened here? This is the exact same inverse fair value gap. Price pushes down and goes back up. You got aggressive sellers, but I feel like the price is pretty balanced here. This is how you can avoid taking losses in this scenario. So what happens? Price comes down aggressively. We look at negative delta, negative delta. Right here, this is interesting. You got positive delta of 205, but you got a red candle. What that means is there's buyers starting to step in. There's buyers that are starting to step in into this. Look at this. You got aggressive selling, but you also got aggressive buying now, right here at this level. Aggressive selling. The sellers are trying to push the price down, but it's not going down. There's a lot of effort, but they're not being rewarded. Then what happens? You start getting positive delta. You start switching directions. Right when you break this, that's where I entered with my stop loss under here, targeting these highs. That's example number one. And you won't be able to see this just off a candlestick chart. You literally won't be. You could guess. I mean, you could switch around. I've seen a lot of guys do this. They'll go over the 5-minute time frame. Okay, no fair value gap. Then you go in the 3. Oh, we got a fair value gap here. Okay, let's enter here now. They'll keep entering until they find a fair value gap. If they don't find one on 3 minute, then they go 2 minute. If they don't find one 2 minute, then go 1 minute. So that kind of becomes a guessing game. You keep switching through time frames, but this is where the edge comes in. You can actually see the price, you can read the price, and make a story out of it. Let's go on to example number 2 now. February 3rd, what happens? We take out Asia low, we pump up. Then we have this aggressive push down, right? On this candlestick, I'm sure if this completely got inversed and broken to the upside just by a little bit, a lot of people would have looked for reversals. I mean, I would have too. This is that exact candle, this right here, right after the open. I mean, you can't really read nothing in here, right? You don't know. Only thing you know is that there's an aggressive push down and the price reversed up. Well, over here, we can see that there was a big seller here. Big seller. Look at this. 56 orders, 53 orders, 0 buyers. What these numbers represent is that on the left side there's sellers, on the right side there's buyers. So you got big sellers here, but no buyers. So usually this is your true fair value gaps, this stacked imbalance. So it's a shame I kind of missed this trade. I would have taken it, but I missed it. I don't really like trading the first 15-20 minutes. I would have definitely taken this if it was after 7. But the one that I did catch was this right here. So what happens? Price is coming down. We left this big imbalance here. We got this imbalance. So right after this imbalance, I start looking for sells. I don't really know if price is gonna keep going higher or at what point it's gonna stop and turn. And so what I waited for price to generate liquidity. You got lots of orders sitting below here. Price generated liquidity, then I rebalanced, and then I look for a sell. So right off the bat, I see you got a big buyer here trying to defend the position, and then you got a big seller. Seller's trying to put this price down, but it's not working. And so this is the point, that 15-minute rebalance area, right? And now I didn't know if price is going to keep continuing going higher or it's going to come lower. Then I waited. I waited for this big seller. You got 175 contracts here. I wanted to see if he will add on, right? That was my whole thesis behind this trade. Right when price came here and it broke aggressively, look at these imbalances price is leaving behind. There's so much selling going on here. I entered right here with the stop loss covering the high, and then I entered for these lows. And that was my trade. Yeah, cool thing about order flow is you can pinpoint where there's big buyers and big sellers. I think that's one advantage, because on this kind of chart, you don't know. You don't know if these buyers will hold. You don't know what activity is going on here, right? One thing we can really see is, okay, you see this, these buyers got induced, early buyers got induced, break a structure or whatever, and then we're gonna turn back up. But you don't know that, hey, you got sellers sitting, you got big sellers here, big seller, big seller, big seller. Will they, when price reaches back here, will they defend the position or not? And in this scenario, they did, and it ended up playing out. So let's go to example number 3. This example is on February 4th, Wednesday, February 4th. And the old me would have looked for buys, to be honest with you. I would have thought, oh, there's so much liquidity. There's so much liquidity to the upside. We can go to the fucking moon. But order flow told me something else. You see, that's the thing about candlesticks. Candlestick, the way I used to look at prices, I think this will happen, but order flow kind of shows you what's happening at that time. So we know price is bearish. We can also see this, price is bearish, right? And we don't know if price is going to go up to here. We don't know if it's going to go up to here. We don't know if it's going to go up to here. But in order flow, what I know from yesterday, there was a lot of sellers present here, right? So the least we could do is get a reaction from this area. We took out these equal highs, right? Right after the open. And we filled this fair value gap, but we didn't fill it completely. So in order flow, that's what this fair value gap is, these stacked imbalances. I put my limit entry right here, 6952, covering the high, and I aim for just a 1 to 2 or a little bit higher than 1 to 2. And this is the 5-minute footprint. Let me show you the 1 minute. Big seller here, right? Right at 6:50 a.m. Big seller, lots of selling happening here. And price comes back into that area. You got a big buyer being absorbed. You got no aggressive sellers here. You got a passive seller absorbing all these aggressive buyers at 6952. And that was it pretty much. That was my last trade, which turned out to be a little over 122. And I have plenty more examples with the order flow that I back tested, and it's what's working for me at this moment. And it's not, for me, it's not about being right. It's about not forcing the trades that aren't there. And I think that's where order flow helps in tremendously. And if that's useful to you, then stick around. I'll see you in the next one.